This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Hello everybody, welcome back. Let's wade through some traditional markets first, shall we? So just got to bear with me here. I know we're doing the Patreon live stream. For Patreon members, I suppose we'll probably be looking at any one of these things anyway. I just wanted to put it into context because today we've got Powell is speaking, he's testifying, so that's going to cause some volatility in the markets. So for longs and shorts, for me, it's you're either both winners or both losers. It's going to be volatile. It's going to be a mess, to be fair. So derivatives, not really a big fan. Not at this stage in the market. Maybe a little bit later today, maybe tomorrow. These sort of trends or positions can I suppose be more appropriate. But for today, it's probably best just sit back and watch the show, to be honest. Right, let's start with Euro, and we're going to talk about the chart. So we're not going to try and interpret too much about what may or may not be said and the volatility that may or may not incur today. We're just going to think about the chart because that's all we've really got here. Let's not think anything fundamental or anything like that. I'm just not going to think about that. I'm just going to look at the charts, okay? So again, the same old analysis will apply to this Euro on the daily. We did come down for the golden cross retest. We did bounce from it, and now currently we're sitting above relatively comfortably the majority of moving averages, to be fair. This is a decent enough place to expect a movement at least to the top of this Bollinger Band on the of this area. So we're talking, well, I mean, it's tiny moves really if you think about what we're actually referring to. And again, we are talking about a volatile day for Forex, which will then spread into everything else. But we're looking for a move up for about 1% on the Euro. A move up to 1%. Probably have a pullback and then continue with this uptrend, forming what I would expect to be the V-shaped recovery. If I was to look at this chart, if it was just like a test, if I was doing a TA exam, I'd look at this chart and go, well, there's no reason at this point to expect it to break down. Not really, not based on this daily at least anyway. If anything, we'd be looking for it to actually go on to make a new local high. So I still believe that to be the case at this very moment in time. That's what it suggests. S&P, slightly different, but more or less in the same bag. You can see we came back, we broke down to the 200 simple moving average and bounced from there. Again, that's a golden cross formed around here. This is a golden cross retest on simple moving averages rather than exponentials. Same deal really, and working on a V-shaped recovery. Getting a bit of a rejection as we speak at the moment below the Bollinger Band center. This is where we closed yesterday, so a bit of a sell-off. We merged our way up towards the top, but closed below it. So we should expect pullbacks down to maybe the 20, the 21, to 200 effectively. So give or take, back down towards the 4,000 area. And if we come down even lower, not really too much of a big deal either. I would expect to remain bullish on this one above 4,000, definitely. But even coming back down to revisit these previous lows, but it's 3,900. DXY is obviously the inverse of the Euro, but we'll look at it all the same. On the daily here, it does make it look like it wants to go up a little bit further. Let's not get too cautious, I would say, but it does look like it wants to have another bounce on this one on the daily, which is, I suppose, kind of a little bit concerning if you think about if we do get rejected or come back down on the Euro, so we lose 1%, then we'll obviously gain 1% on the DXY. But there's more to the DXY than just the Euro. But yeah, the DXY does look like it's poised for a move up. So that throws a little spanner in the works, because now we're losing the symmetry across the major spectrum of dominoes that we like to look at before we go into crypto. So yeah, there is a bit of a difference now between the Euro and the DXY. They both actually look a little bit bullish, to be honest with you. They do actually both look a little bit bullish on the daily, that would be. So yeah, skeptical really about how this move could be. So it renders things like the S&P I suppose I'll probably say bearish in the short term really, as in like the most, today's moves, tomorrow's moves, whatever, they're poised for a bit of a pullback, but that's okay. Gold, again, this is a carbon copy of the Euro, isn't it, really? So all the way up, back down to golden cross retest of the exponentials, and then a bounce from that. Currently holding above the 10, the 20, but below your 50. So Yeah, again, not massively sold on the short term, but if I had to put my finger on it, I would say that at this very moment in time, it is poised for further upside. But it's going to be sensitive, I would imagine, to whatever the Dixie decides to do. And again, if the Dixie does bounce from here, we really could move up by, again, another percent. So it is looking like it's going to battle with the euro today. They're going to decide who is actually going to move. And again, because today involves the Fed, there's going to be volatility in both pairs, which will then, like I say, leak over into the into everything else. So yeah, gold is included. Oil. We have not looked at this in a while. Oil used to be a bit of a trader's paradise, to be honest. And I suppose it still technically is. We've hit this top side of this range now here. It's very much been a range area coming down to these bottoms around 72, 73, and towards these tops about 82, 80, 81, 82. And so we'd be looking for a range break on oil, which would then be anywhere above 82 to then start moving back up to our previous range, about 90, 92, 93. At the moment, though, it does feel a little bit like it's reached more or less the top of this range, but breakouts from here would then, I would say, almost certainly go back up to the previous range, 93. Natural gas had a big old dump party yesterday, so energy is a strange one. Now, if you want to talk about strangeness, look at the state of this chart. This is Bitcoin's chart, which is honestly, it looks like, looks like one of those things called that coppers use to sort of pop tires, a stinger. It looks like that. Someone's reeled out the stinger on the chart here, and that's what's going on here. It's GTA all over again. This is the smallest, lamest, most unconvincing range ever, and really is as much as I would like to see, and I do expect to see this breakout, even if it were to just have a bearish retest of this death cross on the 4-hourly, by the way, on the 4-hourly, even that is a lot to ask considering we've been in this range for so long. It's flat as an absolute pancake. Really, to be honest with you, really is very difficult to try and interpret which way this is going to go. But yeah, short term, even if it is a bearish retest, you'd look for a move up to around 22,800 and a rejection from there. If we were to break and close a 4-hourly above there, I would expect 23,300 again, which is the main area, the main range that I'd like to see reclaimed if we're going to get that V-shaped recovery. And if we're talking about V-shaped recoveries like we seem to be talking about them a lot, we'll be talking about the 200 exponential more or less being tagged, floating above the 50 exponential as well at the moment on the daily. So again, mostly trying to close candle bodies above there, which again is technically not massively bullish, but it's still in line with the overall analysis of looking for a deeper pullback like what we said, and then a bounce from there like what we expect. So I know today is going to be a messy day. It will be a messy day. And there is no trend really available on any of these charts. They look like they're coming down for bullish retests and continuation of the trends to which they have been in for the most part of this year. But trends do come to an end at some point. But at the moment, I would say ever so slightly that the trend is still in play on the higher term timeframes being the daily for continuation across the board for everything. But we have basically been sat silent now, waiting for something to happen in these markets. And today might be the opportunity, I suppose, for a decision to be made for the markets, which is not normally the case. The market normally decides, and the Fed, they just do something. So I think pausing trading at this very moment in time is probably the best thing to do, because the market is looking for a green light or a red light from the powers above. But if it wasn't for all of that, which I think is why it's been so dull trading, especially crypto, but dull even for the most part yesterday for stocks, really. It went up, they went down. I think we are waiting for the words of wisdom from the man, the ultimate man of everything. Everything is centered around whatever it is he's going to say. Now, if I stand back from all of that, right, how my approach to CPI and FOMC and just the general economic factors at play that currently are upon us, right? So I don't want to assume anything new, although I've been talking about the escalation and this, that, and the other over in Eastern Europe and things like that, which is a real thing. And that will likely affect markets when something does begin to happen over there. At this very moment in time, if we put that to aside, inflation is coming down. It is. We had a higher CPI read, so yeah. So what? Slightly higher. That's fine. PPI slightly higher. Everyone, it's almost like everything was ever so slightly higher this last time round, and it spooked a lot of people because everyone wants just to see consistent downtrend now for all inflation, regardless. But the trend is the most important thing for me to focus on, and we focused on this loads of times before. The trend is still very much a downtrend for inflation, and so we should expect that trend to continue. There's no reason really for it to reverse at this point now. We've got higher rates of borrowing. We've got all the things that generally would feed into it. The only difference is going to be this bad boy over here and natural gas, which obviously we did have a serious rally on natural gas, and we might be looking for a breakout on oil. And then, yeah, maybe we will see inflation go back up, and this will be an idea of how we can, what we should expect on the next CPI. If the next CPI comes through hotter than expected, which will incorporate the price of oil and natural gas most likely, so you might see that, then there might be a tick up, and that might mean that the Fed are going to increase by 50. As it stands at the moment, I reckon the Fed are just going to keep going down the 25s, and then maybe a pause, despite, in the face of the slightly higher than expected reads on inflation. So that's just my 2 cents, and it literally is just a 2 cents. I'm not an economist. Even the economists that you hear on Bloomberg or whatever, they're all at odds with each other. Nobody agrees because nobody really knows. So for me to say that this is definitely the way it's going to go, man, that's not it. That's not what I'm saying. I expect that would be the way it would be going, because if I was in charge, that's what I'd be doing. But there's a reason I'm not in charge, because I don't have a clue what's going on. But that would make more sense to me. Still keeping on with the rate hikes, but at a lower pace, in the face of a slightly higher CPI. Right, I will leave it with you there. Thank you for watching. I hope you have a nice day. If you want to join the Patreon, there's links in the description below. And there's also links for absolutely every single thing that you ever could possibly want when coming to trade crypto. Right, thanks for watching. Hope you have a nice day. Take it easy.